right? Even in these recent sell-offs, the sharp bounce back were very aggressive, right? The sell-offs were short and sweet. The only other time you saw this was back in August, where you had the capitulation sell-off move into the end. And then before that, it really wasn't until 2022. But again, the Nasdaq can go down a lot longer than people ever think. So be very careful with this stuff. I am selectively buying the dip. We're going to pass the show over to Chris Pulver here. He's just arrived. Before he joins, let me just remind you guys, sale is ending on the Edge Finder. If you've been thinking about getting a copy, take advantage of all the different discounts that we have going on, or all the different tools that we have available with the current discount that's going on. You get the top setups algorithm, our sentiment indicators for retail traders, for institutional money. You can see what they're buying. You can see what they're selling. Seasonality, you can see all of that. Our economic data for US, UK, EU, Japan. Heads up, we are adding the Australian, the Canadian, the New Zealand, and the Switzerland economic data as well. This is just around the clock projects for us right now, but it is all coming, and it's coming as fast as possible for our traders using the Edge Finder. If you don't have a copy, now's a great chance to get it for 35% off. To take advantage of that discount, click the link being dropped in the chat right now. You can speak directly to our support team, or head over to a1trading.com/edgefinder to pick up your copy today. Start trading with the Edge Finder, start trading with fundamentals, sentiment, take your trading to the next level this year. Up next, to help you take it to the next level, we got the man, the myth, the legend, Chris Pulver, coming in just after this quick break.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's up, everybody? Happy Wednesday. Welcome back. Hopefully going to see some profit here in the next few minutes on SPX. Just time is working out nicely. It's been a chop day. Got a couple of trades on earnings. Added some trades into the Pulver alerts yesterday. Selling some premium. Market, I'm taking stabs at selling premium. Let me see. I'll bring this up right here. Pretty simple strategy that I like to take advantage of when we have the volatility index, or the VIX, over 20. And let me bring that up right here. I showed this in, let's see. I showed this in some of my sessions this week. Let's go. Okay, give me 1 second to load this up. And let's go. There it is. All right. So this is what it looks like. Basically, when the VIX is over 20, I sell premium. Over the last 11 years that I can pull 1 minute option data, that's done pretty well. High win rate, almost 95%. Average winner and loser, I can tweak this with profit targets between 15 and 25%. I mean, I can just let it run, but I mean, we're compounding, and this is just simple one contract trading. This isn't anything crazy. But in the event that VIX is over 20, I'm willing to take up to 5 trades at a time. So this would be like, a Monday every week if the VIX is up, or every day, just kind of staggering out expirations between like a 40 and 50 and 60 expiration. But I mean, I would take an equity curve like that traded even through, 2020 was really the only real hiccup this strategy had. You're being opportunistic. You're not trading this thing all the time. Given the fact that we've had, how many trades? So you've got about 250 trading days a year. I've got 11, actually this is 12 years of data. So 12 years of data. So hypothetically, if we traded this thing every day, we have up to 3,000 trading days. This has only taken 725 trades, right? So you're only trading this, I don't know. It's a quarter of the time, right? It's still active, but it's just taking advantage of this when, am I not sharing my screen here, guys? What's up? Here we go. Anyway, it's just taking advantage of when the volatility index is high. Does it take max losers? Yes. Max loss would be during this COVID cycle. Other than that, doesn't lose a lot. And profit target is pretty solid. You can bump around this profit target where 15% is fine. 20% same thing. It just makes a little bit more money. 25% makes a little bit more money. What it requires you to do is, this is one thing that's kind of nuts about the strategy, is the average hold. Even though you are going out to a 40 to 50-day window, the average hold is only 4 days. That's what's crazy about this market. Like, when you think about what this volatility index does, right? I mean, we have seen now like steady volatility. This is not usual, right? So we had this big like outlier event during December. That was like one of the biggest single day increases ever. And then the same thing here in August. But to have this like slow and steady climb of volatility, I've got to wonder, right? I've got to wonder if this is slow and steady rally to either pop up and peak and then volatility comes back down. Okay. It wasn't that long ago where volatility back in 2022, when we were actually entering into a bear market, it was the Nasdaq peaked out in November 2021 and then started to tumble hard all of 2022. The S&P didn't peak until January 2022 and then spent the entire year, January to September, basically, in waves, moving its way down. But this was our volatility, in the 20s to 30s, 20s to 30s, 20s to 30s. That was a bear market. I don't think we're going into a bear market. I don't. Okay. I think this market needs a correction. It's getting a correction, and that's fine. But with this slow rise in volatility, fingers crossed that we don't have some big outlier event and that's the peak in volatility, because that would be a crash, right? I mean, if we have a peak in volatility, we're going to have this like nasty, ugly capitulation move. I don't know what that would be. But this market has, realistically, other than the last like 7 or 8 days of a lot of like intraday direction, this market's taken a lot of uncertainty and it's done pretty well with it. I mean, considering we've only been 5 or 6% off the highs, I think 8 or 9% on the Nasdaq. We did hit some 200 moving averages this week, which I think is noteworthy. Yesterday in the futures market, we did actually poke the 200 moving average, but I still don't think this is good enough. And the reason why I say that is because the futures market is a bit more volatile, and we did tap the 200 moving average, but we're still having a red day today. If we go to SPX, we're almost there. We're almost there. This is all the stuff that I talked about over the last couple of weeks. Connect your April, your August lows. The 200 moving average is right here. If you're ever using a relative strength, I did set a chart on here in relative strength. I used a 14-period relative strength, and watch the 31 value on the RSI. 31 value. And if we have 31 value getting hit on the SPY, or 31 value getting hit on the Qs, we're trading around right now around 33. Look at the oversold right around that 30 value. You can see that this just took profit on SPX. Good. All right, nice. That was a nice little winner. I'll take that there. Okay, let me do a quick update here for the morning. Update 10:31 a.m. Eastern Time. Beautiful. Okay, so Qs, you can see that anytime we've hit, close to that 30 period, it doesn't hit very often, even on a 14 period. I personally like to use the RSI 21 period just because it's rarely overbought or oversold. But you can see on the, the 14 period, we get overbought pretty regularly. And it's not when it first goes overbought, you want to be protecting profits. It's when you show divergence, right? So if you make a high in price and then you make a higher high in price, what you want to look for is divergence. When you see a higher high from price goes up, you want to see a divergence level in momentum and a divergence level in relative strength. That's where I'm starting to look for topping patterns, or at least protecting some profit. Okay. So as we've been selling off here towards this 200 moving average, we're getting closer to this market. And I wouldn't be surprised if this is a pretty aggressive buying spree. So we're not that far away. Okay. I'm just throwing it out there. Like, this is where I think if you want to be opportunistic in 2025, this might be one of the better opportunities that I have. Okay. So if we come down and tap this 200 moving average, I'm going to start positioning. I think this is an area where I would just take some bites. Bull call spread looks pretty good, maybe 30 to 60 days, even 90 days out. We can make some good money. You can go week to week if you want to, but even giving yourself just a window. I mean, I don't think it would be awful. I'll just put this out there. Like, okay, let's say that I'm comfortable saying like today's the bottom. If I'm just going to say today's the bottom, it's not that expensive. If I did an SPX trade, okay, let's go out. Let's say, I don't know, 40 some days. I'm going to go out to the end of April. Okay, the end of April, and let's say I'm comfortable saying that we have a bottom. So if I bought a call and I looked up here and said, okay, I think we can get back to 6,000 or we can get back to 6,140. Let's find out. So if I buy and then I sell a, how much is this going to cost me? So if I buy a 57.80 and I were to sell the 6,000, okay, that's an expensive trade. So I risk $11,000 to make $11,000, or risk 11.2 and I make 10.6. Like, it's an expensive trade trading SPX. Take this to the SPY, it's going to be a fraction of that. So I go to the end of April. If I bought a 577, and again, this is not the trade I'm taking. It's just if I was confident this is where the bottom is. If I bought a 577 and sold a 600, let my option chain fill in here. There we go. There. So for $1,100, I could take a one contract trade, risk about $1,000. That's like less than 1% of my account, but I could also make that 1%. It's about a 1-to-1. Do I think that trade is fair? Yeah. But it's also, it doesn't require 577 to have to go all the way to 600. It requires 577 to go to 588. So can we get to 588 and have about a 1 to 2% move in the next, 56 days? Possibly, yes. That's why I like the trade. Right? So anyway, there are ways to trade it. That's a very simple strategy to benefit from this. Another one that's also really nice is, that's all. This a little bit wider. I mean, maybe you're not going to throw $1,000 at it. That's probably what I'll end up doing for a couple of trades and staggering them out. But another way to make this more cost effective would be, okay, let's say this is where price is trading at right now at 577. Well, I'm going to buy an in the money call, which is more expensive, but I'm going to sell about an equidistant away. So I'm about $5 in the money. I'm going to sell $5 out of the money. And now what I do is I almost take away most of the intrinsic, actually, I take away some of the extrinsic value that I pay. All I'm really buying here is intrinsic value. All that means is I'm buying what it should cost me. 572 to 577 is a $5 move. I'm only paying $6 for this trade. So now I'm only paying about $1 premium on this position. And if price can go up above 582, I can turn this into a $10 credit. So I make a little bit less, like I'm risking more to make a little bit less. But the more I go up here in profit, like move it up by $1, fractionally higher to make another $1, right? So I'm moving up about 30 to 40 cents every time I move the strike up by $1. I'm paying maybe 30 to 40 cents to make $1, right? So would I be okay paying, $7 to make $12? Sure. I mean, it's a bit of a trade-off. That's the skew you have in pricing right now, but I like the trade. I like the probability, and this is what I will be doing when it comes to where I'm more confident that we have some lows that are in. So I'm going to take some bites and nibbles, and I've talked about this. I'm going to take some stabs in this area with trades that are probably 30 to 90 days out. And I'm going to try to make a decent chunk of profit here. I've already kind of calculated where I'd like my watermark high to be. If we get even near these all-time highs, I don't need them to get there, but I'd love them to, obviously. But even for this trade over the next 30 to 60 to 90 days, I'd position my portfolio where if we do get a nice little rally, then good. There's good money to be made. Have some ability to cross the watermark highs, get into some new profits for the year. And also, I just closed out some more hedges today. I updated that in my Pulver alerts here. So I want to say, I'm just going to search for hedge. So MES hedge. Yep, that trade is done. That was a trade that I closed out for like $270 yesterday. So I'm going to jump to that trade and add a reply to that one. So this one is trade management update, MES, hedge play, entry for $95 debit, closed for 260, credit or higher. Nice win on the hedge to help offset this recent slide. Okay, so my hedges were on MES, ES, SPY. Those are my hedges. I have probably protected close to $20,000 or better on this slide. So that feels pretty good. It's not, game changing, but a 20K hedge does move the needle a little bit, and it probably was more than that because I closed out some fresh ones today. So it all it does is allows $20,000 to kind of be banked into, if we do return and I get some of my positions to be repaired, then that's $20,000 that adds to the bottom line, and then profits once I time this more, another hopefully 30, 40, 50, $60,000 of profits the upside. I'd like to try to make a move in here if I can. I'd like to make a move to position my portfolio for another 100K. I would love for my watermark high this year was 195 or so. I'd love for this to get back up towards this level, and I'm looking at close to 300K or better. If that is the case, I'm probably pretty happy with trading for the year. I don't want to just pack it in and say I'm done. That I can do this year, but I will be cleaning up a lot of positions, going a little bit more defensive, and trying to do my best to protect some profits and limit some of that exposure. I'll probably make trading for the rest of the year pretty boring, which isn't a bad thing, but I want to make sure that there are profits to be made with this market being very uncertain. Okay. All right. Do I like buying puts? Buying puts 12 months out. Why would you buy a put 12 months out? That's an expensive hedge. And if you buy puts every year, you're going to see that you're just going to lose money. If you're in a bear market, yeah, you'll kill it. But that happens once in 4 years. So selling puts, sure, you can sell puts all year long. It's an easy strategy. Go out to a low delta, sell a cash secured put, be willing to own it. Okay. Don't just expect like I'll sell puts and never take the underlying. Look, if you're going to sell a put, I always treat puts like if I had to own it, I'm willing to own it. It's simple. Like you can't just throw puts out there. I mean, you can manage them. You can say like, well, I'll sell a put and I'll close it out at like a 200% profit or a 1 to 200% risk. I mean, you can, but if the markets are nasty, they can blow through your stop losses too. That's undefined risk. So anytime I put a put out there, like I am willing to own the underlying, although I may not want to. Okay. Anyway. All right, let's go top down here. I do have to run at the top of the hour here, gang. So everyone watching and Chandler too, like I've got a hard stop today at 11. I had a webinar that pops up. So I've got 11 o'clock webinar that I got to run to. But let's go top down. Let's get some work done. We did all things yesterday. I'll do the same thing today. So SPX, I think we're close to all these levels that I've been watching, right? So I'm close to the 200 moving average. I think that now, and you can see the way that price has kind of slowed down today. This is actually a good thing. Price slowing down today for the first time in probably 7 or 8 trading days. I do think that the bearish pressure is a little bit less. I think that the aggressive nature of this slide is a little bit less. It could still have an ugly day or so, but based on yesterday's volatility, based on Friday's volatility, or Monday, yeah, Monday was a freaking crazy day. Based on Monday's volatility and yesterday, I think if we settle in here, we also have non-farm payroll. Hopefully the non-farm numbers don't look awful, because that might be another thing that adds the fuel to the fire to say like, okay, the Bears still have control because now the U.S. job market looks a little bit dicey, right? Look, at the end of the day, if the economy is looking like it's on the verge of struggling, the Fed is going to be more active with probably cutting rates. And it's not the answer. It's probably not the best thing. What typically happens is we hit recessions when the Fed's cutting rates. Like Fed cutting rates right now in the wake of jobs slowing and growth slowing and inflation still being sticky is not a good backdrop for bull market. It's really not. So I just wonder, like, if there's more pain for, like, oh boy, so it's not just tariffs and it's not just geopolitical tensions and it's not just DeepSeek and it's not just this. Now we've got the U.S. economy that's really slowing, and that's going to be sending ripples throughout the markets. So just saying, like, we'll see what non-farm payroll gives on Friday. I will be out of town on Friday, but I'll be watching. I'm curious what the markets do pricing wise. But long story short is this: we have had a pretty aggressive slide here the last like 7 or 8 trading days. Looking at yesterday's volatility and today being somewhat quiet, if we have some inside candle trading here, Okay. And we have non-farm on Friday, maybe that's our final reaction to see if the market can then, find the levels that I want to see. I still want to see this 200 moving average hit. It's really simple. I still want to see the SPX hit the 200 moving average. I still want to see the SPY hit the 200 moving average. I still want to see XSP hit the 200. They're all the same. They all represent the same index. It's the same S&P, right? I want to see them all hit the 200 moving average. Okay. Same thing is true on the Qs. The Nasdaq poked. Okay. The QQQ actually poked the 200 moving average, but it's still holding onto this streak where it hasn't closed below it in almost 500 bars. So I almost want to see this close below and close above, and then I can start getting long tech. Realistically, I'd rather trade the S&P and the Dow this year than the Nasdaq. I know tech typically grows back faster, but my concern is that there's such a move away from Mag 7 right now, and this whole capex spending with AI it's future based, yes, but man, tech is more volatile and it is more sensitive and it can get beat up so much worse. I think there's more resiliency in the Dow and there's a little bit more resiliency and less volatility in the S&P. So I'm going to put the Nasdaq as one of my lower ranked indexes this year simply because I don't want the volatility. I don't want the volatility. So I'd rather trade Dow. I'd rather trade SPY. I'd rather trade XSP. I'd rather trade SPX. I'd rather trade RSP, which is equal weighted S&P, because let's get out of this Mag 7 garbage, right? Mag 7 they're all great stocks. They really are. AVGO, okay, fine. It's in the semiconductor hype and it's now AI hype. Tesla's been beat up like crazy, right? But we still have top 10 stocks. Berkshire Hathaway, it's not a Mag 7 stock. I mean, that is a fundamentally a strong stock with right now what has one of the biggest cash piles in the market. I mean, Berkshire might be a scary good stock simply because they're going to go on a buying spree when it's appropriate. I mean, Buffett's 94 years old. I mean, who knew that the best diet in the world was Coca-Cola and See's candy? If you want to live to 100, just eat chocolate and drink Coke every day. Guess that's the answer. Or be a, multi-billionaire. That'll keep you alive and well. So anyway, no, I don't know. ADP on Wednesdays, no, who cares? ADP it's not even close. It's never close. It doesn't matter. The market reacts to non-farm way more than ADP. It's just a noise. It's a noise maker. All right. Anyway, see my point? The Dow still hasn't hit the 200 moving average, right? So that's what I'm watching for. I want to see these levels get hit, and this is my play. If we're down below it, the aggressive side of me would start positioning for the bounce. The conservative side for me would be we close below it, wait for a close back above, and then position accordingly. That would be don't catch the falling knife. That's probably smarter. That's probably less risky. That's probably less stressful because if we break below the 200 moving average and we have another day down and another day down and another day down, that's going to feel like crap. But if I can get a down day and then an up day above it, that is a little bit better, right? So I'm debating. Do I wait? I mean, obviously I've done this enough where it's like I should probably just wait. Because if we do head lower, I'd obviously rather take some stabs down here than, let's say 10, 15, 20 points higher. Right? All right. Really quickly, before I maybe got 15 minutes here. We got plenty of time to still do top down. Let me take a quick peek at SPX. I might throw in another trade since markets are pretty darn cooperative today. Let's see here if I go. I had a really good premium level this morning. Still getting a good level at 58.55. That's just above 58.70 to 80. So 58.70 to 80. That's a 10 delta. And another 90 to 80. Another $1.60. I might just let this kind of marinate for the morning. Let's see here. That's below the 200 moving average. That would be up above yesterday's highs. 66.70. That I'm going to take this trade. I'm going to go in for $1.55, $1.60. If you'd like to take this trade, I'm going to $1.60 pending. $1.55 will hopefully get filled. Got filled at $1.55. Okay, so I'm in the trade. I sold the 58.70 call and bought the 58.80. Sold the 56.90 put and bought the 56.80. I'm going 10 wide. It's a little iron condor trade this morning, and I'm going to get into that again. So that's a sell 58.70 call, buy 58.80 call. sell 56.90, call, buy 56.80, call. Got filled for $1.55 credit. Okay, that trade is in. Let me throw that into Discord really quickly. Actually, look, it's a 0 DT trade, so it's in and out. You can take the trade or not and put this in an index trade. I'm just going to be, this is a new trade. It's just going to be a 0 DT. So this is a SPX 0 DTE. So it's good today. It's good and over today. Hopefully for a win. So 3/5 expiration. Sell 58.70, call, buy 58.80, call, sell 56.90, put, buy 56.80, put, $1.55 credit. This is a 0 DTE or Condor. I'm looking for the $1.55 credit to trade for $1.25 debit or lower, ideally $1 debit or lower to protect profit. Oops. So this one's going to be pretty fast acting. I would say if I'm in this trade for the next 30 to 60 minutes, I should get out of the trade for profit. Hopefully, if price is cooperating. But that is the plan. Price is pretty chill today for the first time in a while. That's a good thing, and that's fine. And also, we do have levels like if I trade this on SPX. So my call side is 58.70. My put side is 56.90. So it stays right here. If price is going to stay within this range for the day, if price stays very, very chill today, then I can just let that $1.55 decay all the way down to zero, right? I don't like to hold the trades that long because in the afternoons, certainly late in the day, like 2 p.m., 3 p.m., towards the end of the close, the markets can get a little wonky directionally. Like yesterday, we were up here directionally and then down aggressively. The close here, I mean, there's a lot of aggressive, angry direction that happens, good or bad, towards the end of the day. So I try to eliminate a lot of that outlier risk. But I'm going to try to take profit on that thing for under $1. Okay, but trade is in. So I'll monitor that for the morning. I've got about 10 minutes left. Let's go top down. Everybody clear on the thoughts on the 200 moving average? We're almost there. The nice thing is the pace in which the bears have had control here for the last week or so is kind of stalling. That's not a bad thing. If you look on your charts, I think something as simple as the RSI 14 period, look for that to hit a 30 value, like hit the oversold condition. The market's probably going to have some lift from there. Hitting the 200 moving average, probably the market's going to have some lift from there. Anything below the 200 moving average and back above it, the market's probably going to have some lift from there. So as far as timing this, that's how I can see some technical indicators all lining up. Okay. All right. Dollar index, ridiculous 3-day move. Like ridiculous 3-day move. This is not a bad thing. And the US 10-year is up. So I don't love seeing the US 10-year up, but holy shnikes, dollar index dropping. And why would this be the case? Growth risk on US tariffs. Well, is it really tariffs that's causing the dollar to drop, or is it the fact that the Fed is now looking to cut more? I mean, I think it could be a combination of things, but look, I think the Fed again just continues to change the narrative right under our nose. It's like we follow this stuff, but now look and see. I mean, we have even a potential probability of it's not high enough to get this blue to pop up in May, but the market's still expecting a pause through March. Okay, so no emergency cut or anything. But even through May, it's like it's a 52 to 44, 52 to 44 right here. I mean, is the Fed going to move it and cut rates earlier? Even still, June expecting to cut, and now the probability it's slightly shifted where July may also be a cut. and even September, July or September. One of those two is going to be a cut, and then October might be a cut instead of December. So, I mean, we're back in what we thought was going to be 1 or 2 cuts to then 0 to 1 cut to now up to 3 cuts. I think that's where the dollar is starting to really move, is now the Fed is looking to cut more. This is supply side economics. This is QE all over again. And I don't know how this goes well, ends well. I do think that recessions tend to happen way more in a cutting cycle than they do in a raising cycle. Um, so I don't know, but this is probably not a bad thing. Having the dollar get weaker is good for broader market flows. This is good for risk appetite. The dollar index to the upside was, we saw a lot of this narrative when the dollar was getting stronger here, how much pain the market should be facing. It's going to be high. It's going to be harder for the stock market to go higher if the dollar is getting this strong, which is true. So the dollar retreating here is probably not a bad sign. Okay. Now, is it full on retreat? I mean, I don't know. I'm just staying out of the dollar. All I know is that my euro dollar is blowing through that 106 handle, which is why I didn't short it, right? I was like, if we're going to short this thing, let's get some confirmation, this 105, 106 zone, and then break a trend line. We didn't get it. It blew right through it. So this is also a 3-day, very inefficient move. So I don't know if this is like the setup for the market to then do something different, or if this is now a new trend, because if we stay, and it's pretty simple, if we stay above 105, I would be a buyer here, right? If we're in this area, a little pullback here, and this, why not? Why can't we recover? There's strong support. There's good asymmetry. I like the structure. I like the area. Same thing on the pound dollar. This should help my Kiwi dollar quite a bit. Okay, back to break even on the Kiwi dollar. Aussie dollar, back up there. That's nice. Those have been beat up pretty badly, but pound dollar, again, did it break the right-hand side of my trend line? Nope. So there's no sell trade. Euro dollar to break the right side of my trend line? Nope. There's no trade. Dollar CAD has barely moved. Dollar Swiss dropping nicely. I'm fine with this. I want to reload on dollar Swiss. If it comes back to 86 or 85, I'm going to load back up on this thing. Dollar yen breaking some lows. This could be a topping pattern on the dollar yen. If we pull back at all, this could be a really nice swing trade. I also would hate to hold this position. I'd hate to hold this position short in the currency market simply because I don't want to pay the negative swap. But I think right now your best exposure, if you are currently trading dollar weakness, pound dollar, euro dollar, probably the best trades. They are getting the most love for this weaker dollar. Aussie, New Zealand, still, they've been so weak. They're recovering. Swiss is pulling back a little bit. JPY is still chop city. So, CAD is not budged. I would say your euro pound are a better place. Right. So anyway, that's some currency stuff. Gold. I'm still going to wait for a pullback. This is another bar count that I'm watching very carefully. I'll wait. I will wait. If gold goes higher, cool. Gold and silver. Silver is actually looking better. Let's compare the two. Okay, so this instrument, this is gold versus silver going down. I kind of love seeing this because if this continues to head lower, then that means silver should be going up. My silver futures position, so SI. Oops, I need to go SI for silver futures right here. Looking better. So I have this trade out to March. This is a nice little 0.6 credit, 0.06 credit, which is maybe $300 or $400 trade. And then I have SLV, which I own, and looking better. So credit spreads looking good. Diagonal spreads looking good. Bitcoin, chop city. But another one, if we start seeing some oversold conditions in the markets, 200 moving averages hit, we see the market starting to lift off. Bitcoin probably catches this bid as well. So if Bitcoin can stay above 75K or stay at 75K, this kind of building zone would probably allow a relief rally in Bitcoin. I think Bitcoin coming back to 100K would probably make everyone feel pretty darn good. I don't know if it's going to necessarily go gangbusters bullish, but I could see Bitcoin at least making a run back up to 100K. So if Bitcoin traders are patient, which they're not, and I know I'm generalizing, but typically I would say it's more of like, if you're chasing meme coins, you're not a patient trader. Good luck. Bitcoin as an instrument, though, sure. I'd like to see this area consolidate, see if we can get back up to 100, 105, 107,000. That's going to feel pretty good. What else? Copper. I've got copper coming in here just a second. MicroStrategy up to 283. This is fine. Coinbase up to 212. I will hopefully, I've got a 111 trade here for $1. I would, if I take on any shares of Coinbase, it's going to be at 190 or less, which isn't bad. Ethereum, I wouldn't touch that right now. Copper is looking freaking fantastic. This copper trade here should be a nice little income trade. This is looking pretty good. So copper up about 87.50. I think my max profit in this one should be about $160 on a one contract trade. So right now, if I close it out, what's the trade at? So I collected 0.007. So it'll be $180 per contract, $180 per contract. But copper's looking fantastic. So this trade that I took, basically positioned myself. So once we had this break and pullback, I was positioning for a 111 trade in copper, and I did put in a wider spread. So it's technically a 1111. So it's defined risk, but that's looking pretty good for a win. And now it just has to wait for time. Time on this one, it's out to April 24th. I'm not that worried about it right now. It's showing about a 95% chance of profit. That based on the option prices and the current out of the money movement, this is unlikely going to be tested or threatened. So copper's looking fantastic. Okay, I got to go. I've got just a couple more minutes here. DAX creeping up towards fresh highs again. FTSE, a little bit of a headache, but still better than the S&P. I mean, we've got the European markets doing much, much, much better than the S&P right now. We still have China. Nice rip on China. Let's just do some China scoping out. We are sitting at, where's my China stocks? Right here. HSI is up. CQQQ is up. Alibaba is up. Baidu is up. Okay, finally. Good. So I got a collar trade in Alibaba that I'll still manage. This one's out to April. FXI making some moves back up towards those September highs. KWeb has room to probably get up to September highs. This is MCHI, which is a China ETF. Again, room to get up to the September highs. JD is hanging in there. We have earnings today after market. So if we hang out, I've got this one with a collar and it's called away at $40. This is out to March 21st. I could also consider if we're way up here again, I could probably roll this for another 30, 40, 50 cents. I do have 1,500 shares, so I might just income this thing for another week or so. But I'll wait for earnings. And that is going to do it for my time. So I got to go. It's 11 o'clock. I got another webinar. But appreciate everyone being here today. Have a great Wednesday. I'll see you tomorrow. All right. Thanks, everybody.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.